Welcome to Traders Corner. Joining me, as always, is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, this time last week, we were bemoaning the 5 points or thereabouts daily move in the S&P 500 for an extended period of time. And the day after, being a Wednesday, the market suddenly cracked. But it seems to have regained itself, shaken itself off, and starting to march higher again. So where do you think it's at the moment?
Yes, that's right. I mean, it's interesting to see the way the S&P 500 has traded over the last week, because you're right. Last week, Wednesday, we saw a big move to the downside. You can see that indicated with that big red candle to the downside there, and the big gap down that we saw last week. And that came about following a little bit of a political storm in the US surrounding Donald Trump, as he sort of slowly but surely marches himself closer and closer towards impeachment territory. Certainly that's what some commentators are saying. But in any case, it was sort of a one-day wonder. We saw the S&P 500 down sharply, much sharper than we've seen in many, many months. And the VIX spiked. The VIX was up almost 50% overnight, which was a huge move in the VIX. But then it's kind of all gone quiet again. And if you look now, the S&P 500 has just basically been pushing up and up and up again. And once again, it looks as if we're back towards this 2400 resistance area that I've been going on about week after week after week. Now, the fact that it's got that knock to the downside, but it's just been bought right back up again, tells me there's obviously plenty of buying interest at the lower levels. They're willing to prop up this market and ready to take it higher. So it makes me think, once again, this 2400 resistance area is back in play. And if the activities of the last week are anything to go by, then I think maybe this market does have the impetus to push out through 2400 resistance.
So it might need a catalyst, but you'd say the inclination is much more a higher move in the S&P 500 than a drop.
I think so, because, as I say, given the way the market has been bought up off those lows that we saw last week, just suggests to me that there is still plenty of buying activity at the lower levels. You're right, there may need to be a catalyst, but maybe not. Maybe it just ultimately pushes out beyond that resistance and then squeezes a whole bunch of shorts out and goes up to make another new high. It's quite possible.
What about our own market? Because that is also trading up and up, thanks to a couple of shares, which we'll get to. But that onward move seems fairly relentless at this point, even though it's kind of incremental.
It is quite incremental at the moment, but yes, we are nudging higher and higher. So I'm going to show two charts of the top 40. This first one looks over the last, basically the year to date, really. You can see it goes back to the beginning of 2017. And what's evident is this upward sloping channel that we've been monitoring for a little while now. That's still very much intact. And last week on the show, I spoke about this little small bull flag pattern, which at that stage hadn't broken out, but I said it looked as if it was quite likely to break to the upside and continue to move higher. And that's exactly what's happened. You can see that little flag pattern has actually pushed out to the upside, and we continue to grind higher and higher. And it's right what you say. I mean, it's limited to a couple of shares, and particularly Naspers. And we will talk about that a little bit more in the show shortly. But that has really been the big driver of our market for this year in a massive way, actually, and we'll illustrate how massive that is in a minute. But what I also want to look at here is this longer-term chart of the top 40 index. Now, this one goes back to the middle of 2014, and you can see really it's just one big sideways choppy mess, which we've been in. And our market now is very much at similar levels to where it was almost 3 years ago. There's not been much movement over that time. Well, I lie, there has been lots of movement, but no real progress. Let's put it that way, because we've been plenty of volatility, plenty of sideways activity, but no real progress in terms of the way the market's moved. There you can see the broad trading boundaries, 41,500 at the bottom of that broad trading range and 49,000 up at the top. Now, we're sitting at the moment just above 48,000. And the big question is, will it have the legs to go up to 49,000, go and retest those prior all-time highs? And if it does, what happens then? Would it break out the top of the range? Would it fail? Would it make a false break to the upside? Who knows? I mean, we don't know the answer to that question. But a lot of it does depend on the way Naspers trades. Yeah. And
you stole this graph from David Shapiro.
I did.
He tweeted it a couple of days ago.
Yes, David Shapiro put this out. I don't know whether he compiled this diagram or whether he got it from somewhere else. But anyway, I'm going to credit him with it because I stole this screenshot off his Twitter feed. So all credit to you, David Shapiro, if you are watching this. But basically, this is a very interesting diagram, and it shows you the contributions of the shares in the top 40 and how much they've added to the value of the overall top 40 index for the year to date. So if you look at the top of the diagram there, that yellow bar over there shows 9.4% gain for the top 40 index for the year to date, right? All fine and well, but look, these are the contributions for each of the stocks. And I think I've got the top 18 shares here out of the top 40. We don't have space on a slide to show all 40 of them because the viewers would need a microscope to see that. So we just show these ones so that you can kind of see the shares that we're talking about here. But notice that Naspers makes up 6.28% of the gain that we've seen on the top 40 for the year to date. Richemont makes up about 2%. So you add those together, that's what, about 8.3%. And take British American Tobacco, that takes you to about 9% with that extra gain there. So we've done basically all of the year's gains for 2017 year to date can be attributed to mainly Naspers and some Richemont and some British American Tobacco. For the rest, if you look at the rest of the shares on that list, it's absolutely nowhere. There's nothing.
I mean, is this what they talk about, a lack of market breadth?
Absolutely right. That's exactly what it means. A market that rallies with good breadth implies that there's a lot of participation from a lot of shares that are all driving the market up in the same direction. A lack of breadth is exactly what we see here, where the market is really dragged higher, for the most part, by one share,
I know,
which is Naspers.
Well, I suppose maybe not entirely extraordinary. SAB Miller was the other share, I guess, a couple of years ago, but that's gone now.
Well, correct, and that's the thing. Since SAB Miller left the JSE, it's upweighted everything else, but particularly it has served to exacerbate the weighting of Naspers. I think Naspers, if I'm not wrong, was about 15% of the market before SAB Miller left, and SAB Miller made up around about 13% of the market at that stage. So there was sort of a relatively equal split between those two shares. But once you removed SAB Miller out of our top 40 index, it meant that Naspers' share of the index became that much bigger, and it's weighting heavier, and thus it has a far greater effect, a greater pull on the overall market. But the big question that then obviously leads from this is, fine, if this is the case, we can accept that, but then we need to have a look at that Naspers share price and say, what is that going to do? Because these huge gains that we've seen in Naspers particularly over the last 2 months, is it sustainable, or are we going to see some of these gains being eroded? Is there a possibility of a pullback? So here's the share price graph of Naspers on the screen at the moment. And I know we looked at this last week, but I just think it's so interesting that I want to look at it again this week.
Sure.
And you can see, going back now to the middle of 2015, you can see this very nice, neat trading channel that is evident there. The upper end of that channel comes in at 2,875 Rand, there and thereabouts for Naspers, and you can see that we're getting very close to that area now. Now, we had 10-cent numbers out last week, which were very good. Admittedly, they were very good, and I've seen a number of analysts raising their target price for 10-cent and thus for Naspers as well. But we also know that the analysts typically are always very bullish on 10-cent and Naspers, and they've always got a target price that is some 20 or 30% higher than where the current trading action is. And it doesn't mean that the share price is just going to keep on going up and up until it meets those analyst targets. There's very likely to be some degree of profit taking, as we have seen in a number of occasions over the last 2 years. I mean, you can see back in late 2015, early 2016, there was a huge correction there of about 20%. And back again late 2016, there was also a massive pullback of nearly 30% in the share price of Naspers at that point. So, you know, my sense is that this rally in Naspers is getting very, very mature now, and we probably are quite close to the top in terms of where this rally is going to end and stall, and then we see some corrective action playing out. And remember what I said about the top 40 index, the huge contribution that Naspers makes. If we see this share giving back some of those gains, well, then it is most likely going to have a pullback effect on the top 40 index as well.
So does this mean that you would be inclined to create some sort of option around a drop in the top 40, or a pullback in the top 40?
Yes, I would be. And in fact, while I'm not going to talk about it today, but I have actually done a top 40 structure, which I'd like to probably talk about on the show next week. Because I think as we look out to this third quarter of the year and out to the September futures closeout, I would like to have some participation in the market for a pullback on the top 40 based on what I'm seeing here, specifically in Naspers.
Okay. Yeah, I mean, it's very interesting when you say the trading action of a stock can be at odds with, because the forecasts are, I think, 3,200, 3,500 Rand from a lot of analysts, but that doesn't mean that it's just going to leg up from where it is now there.
No.
Garth, you have also put on a trade for the portfolio this week, and it's a long position in your offshore portfolio, which has been quite quiet of late.
Yep.
So tell us about Capita Group.
Yeah, Capita Group, don't confuse it with the local one, Capitec. Completely different, although the share price, the name sounds similar and the share code is the same, CPI. In London, however. So we trade, this is Capita Group. It is a business processing and outsourcing business listed on the FTSE 100 in London. And what I like about this is the technical structure. To me, it looks as if it's revving up for a break to the upside here. You can see the levels that I've indicated there. We've got a rising uptrend support at the bottom there. And then over the top here, we've got quite a substantial overhead resistance at £5.85. But now when you see a pattern like this is one of my favorite patterns because it's very much telling us what the dynamic is between buyers and sellers in the market here. You've got this pattern of rising lows, which implies that every time the share price pulls back, it's being bought up at a higher level, implying that the buyers are actually quite strong and they're not allowing the price to come down. They're overpowering the sellers at a higher price every time. And in the meantime, it's bumping up against this £5.85 resistance level. Eventually, when this thing resolves itself, the higher likelihood is that it's going to resolve itself to the upside, and we're going to see a push out through £5.85. And I think when that happens, given the length of this sideways move and the base that is being created here, my sense is that you could see quite a powerful move out through the top. I think it'll probably rally up to the 200-day moving average, which is that line over there. Okay. So what I've done is I've gone long of some CFDs. We'll talk about the mechanics now. I've gone long at £5.85, basically right on the level where I think the breakout should occur from. Stop loss is below £5.50. So in other words, the low that we saw earlier this month in May, if we start to take out that low, then I'll have to get out of this trade and concede that I'm wrong. And my target is looking for a move to £6.40, which is around about where that 200-day moving average comes in.
Okay, so as you talk about the mechanics, show us what sort of position size you've taken here.
Yeah, so long at £5.85, stop loss £5.50. That implies that my risk per share is 35 pence. I'm risking £150 of our capital here. We've got around about £10,000 of starting capital this year, so 1.5% of that is £150. That's what I'm risking. I take that £150 of capital risk and I divide it by our risk per share of 35 pence, and it gives me 428 shares. So rounding it off, I've rounded it to 430 CFDs. My target, as I said, is £6.40, which means that the risk to reward ratio here is 1 to 1.5. So not the greatest risk to reward ratio, not that juicy, but nevertheless, I think it's a trade worthy of taking. And to me, I'm mildly encouraged by what I see on that chart.
Okay. Maybe mild is the word of the year. So show us the portfolios, Garth, as we wrap up.
Yeah, well, it is all very mild when we look at these portfolios. So there's our South African portfolio. Nothing's changed. We're still up 4.74% for the year to date there. Then this is our offshore portfolio. At the moment, we've only got this one position on Capita long, 430 CFDs, where we long at £5.85. We still are in the red on this portfolio. So we need to try and claw back some of those losses and get on the right side of the ledger here.
Yeah. And then, Garth, to end off with, your courses are this weekend or next weekend?
My colleague Andrew Todd is running a top 40 trading course on the 3rd of June in Johannesburg. So anyone that would like to participate or come on that course, you can send me an email, garth@traderscorner.co.za, and then I'll get him to forward on the details for his course.
Okay, and just very quickly, a reminder of a weekly alert that you can get from your website.
Yes, so you go to traderscorner.co.za. In the middle of the page there, you'll see a link to a free weekly email, and if you click on that, it's quick to register, and we'll send you an email every Tuesday detailing exactly what's coming up on the show for the week ahead.
Great, we'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.